What's happening, guys? Another Sunday scan coming at you, this time for September 13th and the week ahead. I hope that everybody had a fantastic weekend. I did. Cody has been in town, odd stock trader, as you guys might know, and Alex Bustos, which is Be the Story, Be the Trader. Some of you guys have probably watched his podcast. We did some content making, which is going to be a lot of fun. I think the one that we did out on the dock, which was just kind of just kind of back and forth, no real plan, turned out probably the best that we've ever done. So I'm excited to be able to put that one out at some point here soon, once he edits it up and puts it out there. So I don't even think he's going to edit it, pretty much just raw. But they got a good sense of what New England is all about as far as the ocean, the lake, and lobster rolls, and just plain old lobster. So, swing trades, I'm going to be doing this pretty quick because we're going to the air show today, which is at Pease Air Force Base, so it's always a lot of fun. See all the fighter jets and all that kind of crazy trick planes and things like that go nuts, but be curious how my kids like it. Probably just block their ears the entire time. But swings have been insane. It's been one of those markets where you push, and just about everything works. Which is where I need to be the most aware, because as soon as that stops working and I've been pushing, if it starts to go the opposite way, you can start to give back a lot very quickly. So I think we talked about it maybe 5, 6, 7 months ago at this point, where very similar kind of swing market. And then if you are oversized for the current momentum, you can give a lot of it back extremely quickly over 1, 2, 3 days. So I want to be ultra aware coming into this week that I'm not just putting on size, putting on a swing trade to put on a swing trade, but that it's actually working, that the market actually supports that, and just be super aware of what's going on. And you guys know we talked about AEHR last week and the week before. Last week I said that the S3 I didn't really think mattered. I think that it was probably a good thing. They'd probably raise at some decent price at some point in the near future. But we talked about it the week before in the 6s, and it went up over 11 this week. So that was really nice. RKLB, I had posted, we talked about the Wall Street Bets algorithm that we have in the room. That Max wrote himself. It produced a lot of great trades last week, and it's not just every name that hits, but it's more about the volume, the score that it gives, and really the chart and the momentum itself. So just because it hits, maybe it's only got a momentum score or a velocity score of 1 or 2. That doesn't really interest me. But the higher it is, it starts to get on my radar. And as long as the trend is supporting that thought process, I'm there. I'll be part of it. So that one was nice. That was from RKLB. That was from 11s that I shared it with Twitter when it hit the algo. And obviously it went over 20, 21 range. So that was nice. EEIQ, nice 3-day doubler swing. CLEU, we've been talking about the buyer and the tape. So a lot of the questions that I had asked about were about swing trades, about kind of what you see, what makes you want to swing. And I think we pretty much covered that in every episode of this Sunday scan, talking about the buyer and the tape, talking about the wicks, talking about that huge transitional volume day, followed by the soak and the soak and the soak and the soak. And then couple that with maybe some times where it should have died. It should have, faded off, but it didn't. They saved it. And, a lot of times, especially in this market, that's where you start to get those traps, and then you have those crazy moves. So we'll see what happens with that. Just the main notes that I had, a couple things that I noticed change in this market with Clove, CLOV, GEVO, GEVO, and RKLB. A lot of the momentum is sticking in that one day, right? Where it squeezes out, pulls back, squeezes out into the close, and the next day it's gone. So you want to be super aware of that. You don't want to be fighting trends on the front side on that first day, but also, to me, I'm not so afraid maybe to join the trend the next day, because I know that there was a lot of exhaustion, a lot of exits, a lot of shorts maybe on the wrong side that covered the prior day, and they're not going to be there today. And then you've got moves like Jivo on Friday. You have moves like Clove where it didn't even show up, right? The day after that huge move, you know, the lights were off, and it's been downhill since. So I think the same thing. RKLB. I was pretty ready for that trade on Friday. I still traded it off the open, but I just wasn't able to use as much size as I would have liked to, as I was prepared, just because it didn't do a perfect gap up parabolic type move where I could potentially size into that trade. However, I knew from the prior days that there was a lot of trapping, a lot of squeeze out into the close, so I felt comfortable and confident that there was going to be a ceiling that it was going to have to break through if it was going to go higher. So that's why I was able to take that trade, which turned out pretty nice on Friday. What else do we have? We had APOP, NE, and BBIG, the trifecta of these merger plays. And then you've got the SPRT. SPRT voted on the merger, and it went down. So everybody that kind of had this thesis, next SPRT, and wait for the merger vote. Merger vote comes, and where does it leave you? So I would also remind you guys, BBIG, phenomenal opportunity last week. Like we were kind of prepared for. Higher the better. Be careful the next 2 days. Let people kind of try to figure out the top, and they did, and they got squeezed out. And then, as you saw, I posted the trade plan there for that end of day unwind, which was just incredible, down into the single digits, under 10 before it bounced back. But that said, we're kind of in that process of that end game of this move. And, for me, it's not about trading it long or short every single day. It's about trading it when there's opportunity. And I think that's a confusing point for a lot of people, where they confuse maybe a short-term bias for a particular trade to a long-term kind of thesis that you're short every single day, or things like that. For me, on APOP, ANY, BBIG, there's particular days I'm going to be interested in them, and then they're going to be off of radar. Let everybody else figure it out the rest of the days, and I think you saw that. And I think at this point, once shorts kind of give up, you start to see the volume start to taper off, and we go from 100 to 300 million to 50 to 75 million to maybe 25 to 50 million. So the liquidity is going to start to move on. And I think it's just kind of the process of, how this trade is going to unfold, just like the rest. We talked about all the other ones, how we expected them to unfold. It might not be in a day or two, but over the long run, over the, let the kind of trade play out, and over the course of whether it's a couple days, couple weeks, couple months, at the end, supply always ends up winning. So let's get right into the questions. Like I said, I'm up. I got a time crunch today. First and foremost, Dave Garagius, something like that. You've got the t-shirt for this week, and next week we're going to do icon meals. We'll do scans after that. We'll get back on with that rotation there. So this week's questions. Kevin sent in, your knowledge is next level. Appreciate that. Thanks. One thing that I would ask is to expand on the support and resistance ranges. I get that above or below you use that, but in between, how do you trade that? And do you wait for each of those levels to approach to be more confident in your long or short bias? So I think it's very important to understand where that level is, understand where that channel is. And I never like to anticipate with size in any one direction, because a lot of times you'll notice in this market that it's just a trap for the next move. And sometimes they put a nice little ceiling right at that top level of the channel, and then it consolidates, and then they pull a goalie, squeeze everybody out, comes right back down. Same deal, ISEE on the short side. They let everybody hammer in on the 1380s before they just shot it right back up 3 minutes later. And I had a feeling about that, because I wrote in the room and I said, I have a feeling it's going to flush out to 1380s, 1370s, and then it's going to swipe up. And it's just, they were training everybody to get comfortable being on the short side, training everybody to come into that resistance, the support level, and then bam, shot him through the prior resistance, and shorts are all on the wrong side. So I think that it's very important to understand where that channel is. If you want to trade within that channel, that's fine. But I never have any conviction. I never trade size in between, because you're just one step, one swipe away from getting screwed on, any one direction. Let's see what we've got here. Doug said, exit strategy on swing trades. So when you go into a trade, you should have some sort of idea of where you think it's going to go. As it comes into that range, if it does, that was your game plan. A lot of times people get on the right side of the trade and they start thinking, okay, well, I'm just gonna hold because I'm up, it's working, it's doing what I thought. But you had a game plan and you thought it was gonna go here and into this range, and it's kind of hanging around in that range. So for me, I'd rather lock some in, because that was my goal. That's what I was thinking it was going to do. And if it continues to go higher, I can always rescale into that trade. For example, AEHR. AEHR broke out the early last week, right in the start of the week. I think it was either Tuesday or Wednesday. I guess we only had 4 days last week. And it broke out, and I sold a whole bunch, got down to my core size, and then the next day it flushed out, and I was busy buying that day, putting that back on, because I had sold some because it got where I thought it was going to go. And I could easily just be like, see what it does, and be more patient, and just like I did with Playboy. And I thought that it was going to go to a particular range, and it did. And when it got there, I just kind of sat on my hands and just was like, let's let this thing work and see what happens. But that wasn't my plan, and it ended up going back down, right? So I think that you just go in with your swing strategy, your swing plan, whatever you were thinking, and lock in if it happens. And if you decide that you want to rescale in after another trade sets up, then you have a new game plan, you have a new strategy, you have a new risk, right? So that's sort of my thought process. As far as if I'm wrong, I'm not going to scale into that trade. If I am not right at a current moment, I look at the daily chart for support levels. So I never want to be emotionally kind of charged intraday on a swing trade. I want to be a little bit disconnected from that, because that's going to allow me to really let these things work. And at the end of the day, that's what swing trades are, right? So if you're watching every single tick intraday, then you're not going to let it work in the manner that it should. So for me, I look for daily chart resistance and support to make better judgments on swing trades. Next one was, how do you trade multiple stocks same time? I can barely keep an eye on two. Is there a hotkey, flick through multiple montages? So obviously monitors is always good. It's not about having a million monitors, but the key with monitors is that you don't have to flick through different names, right? And if you plan to trade something, you can have it there. You can have an eye on it. But for me, I typically look for two main trades. And if I am trading more, it's because I'm on the right side of the move, and I'm letting them work for me rather than work for them. So they don't really require as much attention. I would not do more than you think you can do. I would not do more than you are able to do, because obviously that's something easily, or it's something easy that you can control to prevent, obviously, extra downside or recklessness, whatever it may be. So do what you're comfortable with. The other thing too is you can always set price alerts. So you don't need to watch all these trades. You don't need to trade them all. There's particular times to trade them. There's particular times to potentially size down, and there's particular times to be out of the trade. So if I have a bunch of positions, obviously in my swing portfolio I have a lot more, but if I'm intraday trading more, I'm only sized into two, and the rest of them are things that are working that I'm letting work. Otherwise, there's no point to being in them. After a solid green win, this is from Jason, after a solid win green day, I seem to always have a big red day that follows the next trading day. Advice on actually how to reset and refocus. Well, you nailed it. You got to reset and refocus. So, the key is yesterday doesn't matter, right? You're only as good as your last trade. So the faster you can get back to equilibrium, the faster that you can get back to, you're coming in, you've got a trade plan. What you're doing, more than likely, is I was up a bunch yesterday, so I'll let this one go, and you know, let's see where it goes. But it's not a big deal because I was up a lot yesterday. But when you're trading more size and when you are not respecting the same rules that got you where you got the day before, you're going to have to expect bigger losses. You're going to have to expect, you know, that kind of action on a particular trade, because you're not really trading your plan. You're trading yesterday. You're trading based off your P&L yesterday, and so you're not really making a proper decision based on the trade today. It's very easy to get back very quickly. You know, it goes away faster than you even make it sometimes, and much faster. And if you are trading because you did something yesterday, you know, that's the wrong way. You have to reset, refocus, move on, next. Same thing with a loss. You know, if you're going to carry in being upset about a loss to the next day, you know, that's difficult. All right, let's see. Have a great day. Been having great green days on the plays that I have a plan and I'm prepared for, but I give back partials due to overtrading. I need a slap in the face, essentially, and having trouble comparing to other individuals with massive numbers. So unfollow those people. Stop looking at what other people are doing. Or in your mind, tell yourself, what did this person do to, you know, what was the trade at hand? What did they see? Try to understand the process, not the P&L. Forget it. You know, somebody is always going to make more than you. It's just the way it is. On your best day, guess what? Somebody else made 10x, 100x. It doesn't matter. This is your journey. This is what you're doing. So if you're going to let other people influence you, then, I mean, come on. You don't need to compete with other people. The only person you need to compete with is yourself. So you need to be able to control those emotions. So really, it's you know, after you have a good morning, you know, is this a proper setup? Am I just trading it because I have a padding? Am I just doing this because of another reason? If that's the case, then you shouldn't be in that trade. All right, let's see. I know you beat the horse to the ground on your swings, and they work extremely well, not chasing your alerts, but still trying to figure out how exactly you see volume follow through, and that's simple. So that really comes down to what I hit upon earlier. That's that transitional volume day. Then look for the soak, those wicks where it comes down, they soak it up. Comes down, soak it up. Comes down, soak it up. And that's what I'm looking for the most of the swings. And if you go back through all these swing ideas, you'll see that same setup time and time again. For me, the exit is the day that it speeds up. And if it continues to hold, then maybe I start to rescale into that trade. ATER is a perfect example. I was long on that trade, started to speed up, I took it off. It started to set back up again. I did not get back long, but that was another good example of, you know, I went in with a plan, it sped up like crazy, and am I going to just sit there and just kind of say, you know, let's see what it does, or am I trading my plan? So I traded my plan, I got out, and it reset up the very next day and continued to go on. And so I could have, should have got there, but you know, I wasn't prepared / was busy with other names. So I really think that it's about the daily chart, seeing that happen, and don't worry about chasing an entry. If you miss it, you miss it. Just wait on one of those dips, and you know, if it gets soaked up, then you know that was it's a potential, you know, buy. But be cautious chasing other people's alerts. Be cautious chasing things the higher they go. But a lot of times when these things are working, they continue to go and continue to go and continue to go. And for me, my exit strategy is typically when they start to speed up, at least some get down to a smaller core and then let the rest work. My biggest issue has been sizing up. Every time I size up, I end up taking a decent loss. It hurts me and my account and my mental state. But I also need to be making more. How do I find the balance? Well, I also feel the need to be making more. So again, sizing up is not just sizing up, right? It's about understanding what you're best at. And those are the trades where you want to focus your risk. Those are the trades where you want to focus most of your attention. It's not just by, you know, saying I'm going to do 3x, 10x, whatever today. Because that, you know, you're going to deal with that emotional swing because you're just trading larger. What you need to do is focus your energy on those A+ type setups where you have the best probability for you. For you, what are you best at? And whatever that is, that's where you need to focus your risk and your attention. And then over time, you start to build up this nice, you know, nice account size to maybe scale up across, you know, all of them. But For me, I always just, my main focus, my main size is highly liquid, high volume, range, you name it. And as long as it's a thick, high volume name, I'm interested. Thin names, I used to get a lot of attention towards those. It's just not worth it because at some point they will catch up. So for me, my A plus setups are those parabolic overextension type charts, but the thicker names. Let's see. Last one was Jed. At this point in your career, why don't you focus entirely on swing trading? So I think you can do both. I mean, I basically do passive investing with my IRA. I do a lot of long trades. I mean, obviously that's all long trades, but I think there's a lot bigger money on swing trades. I mean, my best trades have all been swing trades. But I think that having being able to come to the market and having that income, being able to anticipate potential moves. I mean, why stop doing what's working? So I think if you can start to mold into both, I think that there's a good way to do that. I think that as you get more and more aggressive as a small cap trader, you'll realize that you start to outsize the current market, right? So as you become a bigger trader in small cap land, you actually could become your own risk. You could be outsized for that particular name, and you could be the market, right? If you're on the wrong side and you have too many and it starts to go the other way, I mean, you're your own risk. So what I've noticed and what I've done is I start to kind of scale out into these bigger cap names and things like that rather than all the small caps, because all it takes is one on the wrong side, you're outsized, and no matter how good of a trader you are, it could have one of those outlier black swan events, and then that's that. So I do a little bit of both, and it's a happy medium. I'm happy with the swing trades that I take. For me, if I have too much in a portfolio, I mean, I'm never disconnected. So I'd rather just kind of find that happy medium that works for me. So everybody's different, and do what works with you. All right, so I am starting to run late, so we're gonna do this real fast. And first and foremost, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, stop watching. If you are, then by all means, go for it. First and foremost, the chart for ATER does not work on big charts for some reason, so higher the better on this one. I really want to see this thing kind of break out over this 1220 mark and then potential failed follow through from there. It was very choppy. I had a couple good trades on it, but then, it kind of went right back to my entry. So I just moved on because I was taking a half day on Friday. So clean mover, nice action. If you're reactively trading it, if you're trying to size into weakness, then you got popped every single time. Each time that it broke out, squeezed out people, that was a nice exhaustion move. And obviously it unwound from there. You can see key areas around the 13. You can see a little bit of the goalie pull that we talk about. It broke through the key levels and then it came right back in. So I'm going to be watching that 1220 down to maybe the 1170s level as an area of potential patience. ISEE, higher the better. I think that a lot of people fundamentally short this thing. It was a know what you own situation, but they've got a ton of cash. So anytime that these guys can dump all kinds of paper, that's great to know. But just like I said in the room, one, they have plenty of cash, and two, it needs to prove to you that they're going to be dumping that day. It needs to prove that it's failing to follow through. It needs to prove that it's heavy. And when they soak, and it's not breaking down, you need to take note, because a lot of people will be on the wrong side, and that's exactly what happened in my opinion, and it popped all the short sellers. So higher the better. I think we've got some support here, 1340s, and I think we've got some, pretty much 1340s, 1380s, and you can see 1430s as a key level. Above that, hopefully it was 15, 16, 17. I'd love to see it break out and squeeze and do some circuit halts and crazy things like that. Be cautious. But those are the key levels that I'll be watching. 1430s, 1380s, 1330s, which is right under this level over here. All right, on AMC, I don't have a game plan, but I know I want to watch it. It's either going to be down $3 or $5, or it's going to be up $3 or $5, but I just have a feeling that the range is close, and I want to be prepared for that trade. Next up is failed follow through, CEI. CEI, I was short on Friday, had a nice unwind into the close. However, I moved on. It did come in a little bit after hours. Hopefully we've got some pop-ups, 150s, higher the better. And then potentially fades back under 120s and then back under $1. This is super, super retail crowded, but at the same time, I think it's surprised a lot of shorts. So I do still think that we could jump around a little bit, but I think the overall trend is going to start to get heavy a little bit from here. MMAT, higher the better. This one I have kept on radar. I want to have price alerts. It should have some failed follow through momentum, and I'll be watching to join that trend along the way. RKLB, higher the better. I think that you've got a little bit of a resistance level that you can see 1930s, and it came in after hours, so I'd be watching any good pushes towards 1880s all the way up to 1930s, and then a potential unwind from there. You can see that there's a little bit of support in the 1820s range, so that would be the only spot that I would start to get patient with any trade that I have on with that one. Couple other ones, BBIG, higher the better. Like I said before, I think we're starting to get to the tail end of this move. I think each pop's going to start to get sold off, and I think the liquidity is going to start to fade off as well. ENVB, higher the better. Failed follow through momentum is ideal. I think you can use this VWAP level as a guide, and we should have a nice unwind back under 3. For now, I don't want to step in front of it. For now, it could continue to go higher. It could go 375s, 4s, you know, who knows. But if it starts to have failed follow through momentum, I'm interested, burst those 350s levels and go from there. Next is the continuation section of the scan, AEHR. You guys should be familiar with it. I'm continuing to stay long. I've already sold around the core, keeping that core from the 6s. Anybody that's watched the last 2 scans knows that I've been there since 6. PRQR, I am not there yet. It actually came in a little bit after hours, but I'd be watching 780s, 8s. If it starts to firm up, I'm interested based on the chart and based on that huge volume bar on the daily. Hopefully it has some type of opportunity. ENDB, higher the better, or excuse me, lower the better, consolidate, and ideally it comes in 270s, 280s, starts to sort of base, maybe even 260s, and then starts to go red to green towards 350, and a little bit higher. EEIQ, I am still long a little bit, but this one doubled. I sold about a little bit over a half, and I was just letting the rest ride just in case we have a little bit of follow through momentum on Monday, maybe into some circuits. If not, then I'm moving on. ATOS I started in on Friday. Ideally, it might offer some dips first 380s, but I'm looking for maybe a 420, 450 type of breakout. 4 clearly is going to be a little bit of a struggle. It's been the top for a little while, so I would not get aggressive anticipating that 4 until it proves otherwise. I think Zev, higher the better for a potential fade later on, but I am still currently long. I'd love to see it start to base at 10 and maybe break out towards 11 or 12. However, we're probably going to have trouble with the 1050 range, and 1050 is going to be that key level. So I'd either be looking to sell into a parabolic type move, some type of fast move, and then look to fade the trend later on, or just remain long if it's a slow and steady kind of grind. Last but not least, DTST, steady grind, no position at the moment. I was long for a potential liquidity type of event. You can see a liquidity trap, rather. You can see all the wicks that we talk about. Keep on getting absorbed, higher. Keep on getting absorbed, higher. And so that usually brings me in. I was there. It did have a breakout move. They put out a PR saying the same thing that they already had said. So that I kind of used as an exit strategy. But it did hold on, so it's still on my radar for potential breakout. So that's it. Sorry for the speedy trades at the end there. But I am on time crunch today. So hope you guys have a good rest of the weekend, and we'll catch you in the room tomorrow.